The firm is now widely viewed as one of the top 10 artificial intelligence stocks, commanding serious attention among institutional investors. This renewed focus comes after a prolonged period in which valuation concerns overshadowed the company's operational progress, only for those concerns to ease as forward valuation metrics compressed sharply. The company has recently benefited from fresh analyst backing. Analysts have emphasized that the stock now carries substantially less downside risk than it did previously, largely because a significant contraction in forward valuation multiples has already taken place. In other words, much of the excess optimism that once inflated expectations appears to have been worked out of the stock. That change in perspective became particularly clear on February 18th when Mizuho analyst Greg Moskowitz upgraded Palantir Technologies from a neutral rating to an outperform rating. Alongside this upgrade, he introduced a price target of $195. This marked a notable shift, especially given that the firm had previously expressed caution regarding valuation and potential volatility in the share price. Digging deeper into the reasoning behind the upgrade, Mizuho offered strong praise for Palantir's business execution. The firm characterized the company as a category of 1, highlighting a rare combination of sustained revenue growth, accelerating operational momentum, and expanding margins. According to Mizuho, very few software companies manage to deliver all three of these attributes at meaningful scale, which helps explain why Palantir stands apart within the broader technology landscape. For several months prior to the upgrade, Mizuho had openly shared concerns that Palantir's shares could experience a sharp reversion after their rapid ascent. Those concerns centered on the idea that elevated valuation levels could eventually collide with market reality. However, that outlook shifted as Palantir's estimated 2026 enterprise value to free cash flow declined by roughly 46% during the early weeks of the year. Because this valuation contraction occurred within just the first 6 weeks, Mizuho now believes the re-rating process has already taken place. From their perspective, the stock no longer reflects extreme optimism, but instead offers a more balanced setup in which potential upside more reasonably offsets remaining risks. This change has led the firm to conclude that the current risk-to-reward profile is now far more attractive for long-term investors. Zooming out to the broader business, Palantir Technologies is recognized as a leading provider of artificial intelligence systems designed to help organizations integrate, analyze, and act on massive volumes of complex data. The company serves both government agencies and commercial enterprises, positioning itself at the intersection of national security, enterprise software, and advanced analytics. Over the past year, Palantir's stock price has surged dramatically, reflecting surging enthusiasm around artificial intelligence-driven solutions. At the same time, that rapid appreciation has sparked debate among investors about how Palantir truly compares with much larger technology companies that are also benefiting from the artificial intelligence and data surge. When measured against established technology leaders, Palantir demonstrates impressive growth characteristics, but also faces limitations tied to its smaller scale and premium valuation. A closer look at the financials reveals a business delivering solid revenue expansion alongside strong free cash flow margins. These metrics underscore the efficiency of Palantir's platform and the growing adoption of its offerings. Even so, the company's elevated valuation relative to its market size continues to act as a constraint on near-term upside despite ongoing progress within both government and commercial artificial intelligence deployments. From a profitability standpoint, Palantir's operating margin sits at 21.8%. While this represents meaningful progress for the company, it remains well below the 46.7% operating margin reported by Microsoft. This contrast highlights the difference in operational maturity and scale between Palantir and the largest cloud-focused software providers, which benefit from vast infrastructure, entrenched customer relationships, and decades of optimization. Growth, however, tells a more favorable story for Palantir. The company's revenue growth rate of 47.2% exceeds that of many competitors, illustrating robust and rising demand for artificial intelligence and data platforms across both public sector and private sector customers. This level of growth suggests that organizations increasingly view Palantir's technology as mission-critical rather than optional. Valuation remains one of the most hotly debated aspects of the stock. Even with a 27.3% increase relative to Alphabet, the valuation implies that investors investors are placing significant confidence in Palantir's ability to scale its artificial intelligence platform and translate adoption into sustained profitability over time. When comparing Palantir's size, valuation, growth, and profitability against key competitors across multiple years, the company consistently emerges as a unique player in the artificial intelligence ecosystem. Its technology addresses complex, high-stakes problems that few other platforms are designed to solve, reinforcing its reputation as an artificial intelligence powerhouse. Still, despite its strengths, Palantir is not a one-size-fits-all investment. The stock's premium valuation means it may be best suited for investors with a higher tolerance for risk and a long-term horizon. While the company may deserve a place in a diversified portfolio, the appropriate allocation ultimately depends on each investor's individual strategy, conviction, and comfort with volatility. In the end, Palantir Technologies is increasingly being viewed as a category of one artificial intelligence company as analyst sentiment on Wall Street turns more positive, driven by a sharp reduction in valuation risk after a major contraction in forward multiples. The stock recently received an upgrade from Mizuho analyst Greg Moskowitz on February 18th, moving from a neutral rating to an outperform rating with a price target of $195, as the firm now believes the risk-to-reward profile has improved meaningfully. Mizuho highlighted Palantir's rare combination of strong revenue growth, accelerating execution, and expanding margins at scale, noting that concerns about a potential valuation reversion have eased after the company's estimated 2026 enterprise value to free cash flow fell by roughly 46% in the early weeks of the year. While Palantir continues to deliver impressive revenue growth of 47.2% and strong free cash flow generation across both government and commercial markets, its operating margin of 21.8% and price-to-earnings ratio of 293.5 underscore both its smaller scale compared to major technology leaders and the high expectations already priced into the stock. Overall, Palantir stands out as a powerful force in artificial intelligence, though its elevated valuation suggests investors should carefully consider position size based on individual risk tolerance. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.